Good morning. Thank God it's Friday, the very first one in the year 2023. So it's time to have current and relevant business conversations. And it will take place in the next 55 minutes here on Business Morning. Let's start off with global oil prices. It rose as much as $1 on Friday, extending gains from the previous session, supported by hopes of China's demand boost after data showed lower U.S. fuel inventories following a winter storm that hit at the end of the year. Brent crude futures were 75 cents higher at $79.44 a barrel, after it settled 85 cents stronger at $78.69 yesterday. That was Thursday. U.S. West Texas Intermediate crude futures were up 74 cents at $74.41 a barrel. They had settled 83 cents higher at $73.67 in the previous session. China announced more state support measures on Thursday, including establishing a dynamic adjustment mechanism on mortgage rates for first-time home buyers in a bid to boost its highly indebted property sector, which accounts for a quarter of the country's economy. Well, back here in Nigeria, the NFIU has been following up on that cashless policy of the Central Bank of Nigeria. The latest is that from the 1st of March 2023, there will be no cash transactions on public sector accounts.
When we compiled the cash withdrawals over a period of time, precisely from 2015 to date, we discovered that state governments have withdrawn over 701 billion in cash, with some states withdrawing up to 24 billion naira. And then we also discovered that the federal government withdrew in cash up to 225 billion, while the local governments withdrew up to 156 billion. So if we are to apply the law here, all the public servants involved in these withdrawals are entitled to 3 years imprisonment. That's what the law said. Now, it became necessary for us to direct and order the financial institutions to stop completely cash withdrawal from public accounts. We have issued an advisory to all the governors and all the local government chairmen and all the MDs in the federal government we give them between now and 1st of March 2023 to put all facilities in place to operationalize the guidelines. So what is the bottom line? Is that on the 1st of March, if there is cash withdrawal from a government account of even if it is 1 naira, we are going to trigger off money laundering and corruption investigation anywhere at all. Even if there are special needs to withdraw cash from any public account anywhere, that will have to get a presidential approval.
Very serious guidelines there from the NFIU. If they will have to trigger a fraud alert if there's even a naira withdrawal, cash withdrawal from any public account. Well, we'll see how that goes from the 1st of March. And it's not far away from the budget, the 2023 budget, and how to make it impactful. Of course, by now we do know it's 21.83 trillion naira. And what we're looking at today is 80% of revenue, which is projected to be, total revenue is projected to be about 10.49 trillion. And 80% of that is about 8.4 trillion will be used for debt servicing. And we have some other details from that. But let's have our guest joining us now, Abdulkudus Isiaka. He's an economist with ProShare. Thank you so much, Mr. Isiaka, for your time this morning. Well, I guess we've been talking a whole lot about the issue of debt servicing. So when we hear that 80% of the total projected revenue for the year, which is about 10.4 trillion, is going to be used for debt servicing. For someone like you, it doesn't come as a surprise because we've been following up on the story. But what are the implications of it?
Okay, thank you very much, Jenny, for having me once again. I think our worries around fiscal deficit and consequently debt stock are, genuine concerns. However, in assessing, debt sustainability, which seems to be at the heart of all of our discussion, we need to realize that, there are at least 4 parameters to look at. You should look at, fiscal deficit as a ratio of GDP. You should also look at debt stock as a proportion of your GDP. You should consider, how much cost of, financing your debts, that's debt service to revenue ratio. You should also look at, the foreign debt obligations as against your revenue. So I feel all of these ratios will be affected, by, this 80% debt service that we plan, for 2023. That said, however, we need to allay some fears. Of these 4 metrics I mentioned, or 4 parameters I mentioned, Nigeria seems not to be doing too badly in at least 3 of them, except for debt service to revenue ratio, right? And, if we look at debt stock to GDP, yes, now that we're going to be onboarding, as it were, the ways and means advances of the CBN to the federal government, we're likely to see, debt stock rise to 77%, which would push, debt stock to GDP to around 35%. And of course, in keeping in tandem with that, the medium-term debt strategy, debt management strategy paper already indicated that we would increase our debt limit to about 40%, pardon me, up from 25%. So we're not doing badly. For most countries that are peers of Nigeria, we're looking at debt stock to GDP of around 50%. So we're not doing badly on that count. Also, in terms of fiscal deficit to GDP, yes, there's a Fiscal Responsibility Act that must be kept sacrosanct, except in unusual cases. So the statute itself provides that in some unusual cases, we can exceed the 3% of GDP threshold. And then finally, if you look at foreign debt obligation to revenue, we're not doing badly either. For 2023, we have $500 million Euro bond maturity, and apart from that, we're good for this year. Yes, revenues have been plummeting. We're at around $37 billion as of November 2022. But even then, we seem not to be faced with a situation where we're unable to meet our foreign obligations. So yes, there's a big problem with debt service revenue ratio, but all the other counts we're not doing badly. Now, what's responsible for the situation with debt service revenue ratio? You tend to have this debate amongst economists. Maybe it's a debt problem, it's a revenue problem. The truth of the matter is that it's both at the same time. So we seem not to have been innovative enough in coming up with revenue. And we seem also to be doing not so well in terms of bargaining well in terms of the cost of funds. So not be borrowing well. So we can borrow better, and we can raise more revenue, and we can also plug revenue leakages. So we're looking at issues around the scourge of oil theft. We're looking at subsidy removal. We're looking at issues around the structuring of tax waivers. And we can do better in terms of the stamp duty saga as well. So if we're able to recover 80 to 89 trillion naira that is, touted in all of this stamp duty saga, that should also help our situation. We may not necessarily have to make recourse to the debt market, to, fulfill some of our fiscal operations.
All right.
I think we can also make some ginormous savings by looking at plugging that revenue leakage. So of course, we must admit the fact that the federal government has been doing some good job in terms of addressing revenue lost on account of oil theft. But,
all right, Mr. Isiaka, just a minute. Let's just look back a bit. The projection is that for 2023, our total revenue would be 10.49 trillion naira. Now, the estimate for 2022, I think we do have a slide for that. If we can have that slide showing the 2022 revenue as at November 2022. As at November, we had only met 87% because it was projected to be 6.50 for 2022, but we did 87%. Now, if we're projecting 10.49 for 2023, what's the assurance Now, I know the government has been more aggressive already, beginning with with the 2022 finance bill, that they're going to be more aggressive with the issue of taxes and non-oil revenue and all of that. But what's the assurance? Because this is the basis of, whether we have a good ratio, debt to revenue ratio or not, is that we meet up with that revenue. At the beginning of 2022, we didn't see the oil theft figures coming out. We didn't see us not being able to meet up with our quotas or even producing less than 1 million barrels a day. So if we're projecting 10.49 trillion for 2023, and when we just look about some months down, which is by November 2022, we only did 87%. What's the assurance we'll meet up with this year?
Okay, so we can be critical of the government and its plans, but I think we need to stick to the fact. Right? If we look at the assumptions of the budget, 1.69 million barrels per day is something we can do this year, given some of the improvements we've made in terms of crude oil production. If we also look at the assumption of $75 per barrel for crude oil price, benchmark crude oil price, is also not something that we can think to be unrealistic for this year. Even though there are fears of global recession, the possibility that could, send prices downwards, but we don't see it coming down below $75 per barrel. So if you look at some of those fundamentals, we look to be fine for this year. And I feel that, yes, there has been perennially a problem with performance of revenue. As of 4 months 2022, we had oil revenue in particular performing only about 29%. So we had almost 65% or more underperformance of oil revenue. Also, as of 8 months, we had only about 60% or 64% performance of revenue in total. So yes, I agree with you that there have been issues around performance of revenue, and that's why perennially also we've seen actual deficits exceed planned budget deficits. But I think overall we look to seeing something better. However, we must appreciate the fact that this year we're taking a very enormous portion of our budget. We're relying a lot more on budget deficits for this year. About 50% of the budget itself, is relying upon budget deficits, and that means that there's a lot of borrowing cost implications. Of course, we saw the Minister of Finance, Budget and National Planning say a couple of days ago that if we don't get the National Assembly to address these issues around securitizing the ways and means lending, it's possible that the government would incur an extra 1.8 to 2 trillion naira in terms of debt costs, and it's a major worry. However, in terms of, to specifically answer your question, in terms of revenue, I think we're doing better in terms of crude oil production. Let's admit that. The government is doing a lot more in terms of addressing crude oil theft. They're more aggressive in terms of raising taxes, although, and I think this must be said, it's not likely that you raise revenue significantly in an economy that is slowing down. So you want to tax carbonated drinks, of course they backtracked on that, or you could say they backtracked on that, and they want to tax, increase excise duties. Looking at the SRGI, that's the Strategic Revenue Growth Initiative. They've anchored it on 3 points: taxes, excise duties from the SCS, and some independent revenues from DOEs, that's government-owned enterprises. But the truth of the matter is, all of the three, we could contribute a little to what we want in terms of the over 10 trillion naira revenue we project. But then again, we must appreciate that privatization and licensing contributes only a little above 200 billion naira in the 21.82 trillion naira budget spending that we plan for 2023. I think that we're underexploiting what privatization and licensing can do. We can do a lot more by offering a lot of these redundant assets we have around the country to foreign investors. That would help boost our reserves position with our reserves. We talked a while ago about how the reserves are being plummeted. So we can boost our reserves and also improve our fiscal position by exploring privatization and licensing for greenfield and brownfield investment. So, but yes, I agree that we may not perform 100% in terms of revenue, but we should see something much better compared to 2022.
All right, Mr. Eska, thank you so much. But it is important to note that, I mean, for this year, this revenue is 22% is the one that is hinged on oil. The others is hinged on non-oil. Yeah. And as you have noted, the economy doesn't seem to be growing that fast. So the non-oil sector, how strong are they to be able to provide this about 78% of that revenue, even with what we have seen with the 22 finance bill? But anyway, it's a new dawn. It's a new dawn. We'll certainly follow and see. But we have to thank you so much for your time this morning. Abdul Kudus Isiaka is economist with ProShare.
Yeah, thank you for having me.
All right, so the budget is here with us in 2023. We'll follow up on that. And I know that a lot of people are looking forward to that subsidy element in there and see how it will be treated by this administration and the coming administration. But we're here to handle all of that. Let's take a break now. When we come back, we'll talk about another very important driver of the economy. That's electricity. Some people say the tariff has been hiked. Is that true or not? We'll find out in a moment here on Business Morning on Channels Television. You're welcome back. Well, some Nigerians have been saying that electricity distribution companies have quietly increased tariff payable by power consumers across the country. They have put it at about 72 naira 20 kobo per unit. That's supposed to be a hike of about 60 naira. But anyway, we'll get to the crux of that now with the chairman of West Power and Gas, Mr. George Etomi, joining us from Ikoyi in Lagos. Good morning, Mr. Etomi. Happy New Year. I haven't seen you this year, virtually or otherwise. It seems you're muted, Mr. Etomi. I cannot hear you.
Okay, sorry. Happy New Year.
Happy New Year.
Glad to meet all of you in Channels Television.
Thank you so much. So is it true? Is it true that electricity tariff has been hiked again? That's the news going around.
Well, yeah, we just love the word hike. What has happened is that television tariffs, as I've explained to you before, are heavily regulated. And by law, the regulator is supposed to give a 5-yearly projection of what these tariffs will be. This is the major tariff review contained in the multi-year tariff order. So they gave one in January of 2022, which will take us to January of 2026. In between, there's provision for minor reviews every 6 months to cater for inflation, currency exchanges, and so forth and so on. So it is this review which had been given since this approval that's been implemented across the discos. And just to situate the argument, it is not all tariff bands that are going to be increased. In eco electricity, for example, it's only bands A and B for which these tariff increases have been approved, and they are less than 20% tariff increases, not the 60% or the 72 naira. Even with this increase, the highest tariff rate is still around about 68 naira. So that's not true. For the more vulnerable groups, that is the bands A, C down to E, for ECO, there has been no increase. It may jolly well be different with other discos, but it's the yearly, it's the multi-year tariff order that governs tariff increases. It's not that the discos quietly increased it. The other thing to also understand is that pursuant to these powers exercised by the regulator to approve increases, the minimum remittance order of every disco, in other words, the money discos remit to the market, because they also pay for the power they receive, is also increased. And no excuses are entertained. If you don't meet up with that minimum remittance to the market, then you owe the market with dire consequences. So this is the only way the performance improvement plan which is the plan that's been put in place to steadily improve on the electricity market, can work. It depends on all the other indices being taken care of. Don't forget, the electricity market also operates within the larger economic market in Nigeria. So they suffer things to do with inflation, with currency variations, and so forth and so on. And they have, most of their materials are imported. They don't even get any allocation, no favorable allocations from the CBN. They have to source for Forex like everybody else. So they make this case to the regulator, who then looks at it in a minor tariff review and makes for these adjustments. Otherwise, it will be a panacea for failure, because they will be unable to meet with their market obligations. So this is really what's going on. And it's important Nigerians understand this, because it is not something that should take anyone by surprise. It is available on the NEC website. Anybody can access it. It's not a secret, it's open. And you can see what's going to happen. You can see what's going to happen from now till 2026. And you can plan accordingly. This is the way markets work, electricity markets work, not just here, but all over the world.
All right, Ms. Itobia, I understand that it's on the website, but is it possible to have more customer relationship between the consumers and the discos, more communication, perhaps, the bulk texts? That would really solve a problem where Nigerians are suspecting. I do know that it's, because I've been having this conversation for a while, that it takes, the procedure is long. You have to reach out to the regulator. So maybe when we hear about it as a consumer, you are just asking the regulator. When the approval comes and is implemented, a lot of people have forgotten that, so can there be more customer relationship and communication? You have it on your website, but in reality, how many Nigerians will go to the website? Oh, let me go and check and see my disco and see what they are telling me. But bulk text messages, all those little things, I think it will bring more understanding.
Absolutely correct, Ini. There is no substitute for a friendly customer relations between discos, who are the last mile and the face of the industry, and their consumers. Good advice, it's well taken. And I'm sure if the discos are listening, it's good advice, it's unassailable. Customers should be primed, because they too also need to plan and not wake up one morning and suddenly find that they're going to pay more, or you vend and the normal unit you normally get suddenly is lessened. That's the first way you get to know that there has been a tariff increase. I think this message will be sent across. I believe ANED, the umbrella group of the discos, is listening, and they will ensure that this happens across board. But just so we situate the argument, this is a tariff increase that follows a laid down pattern of the multi-year tariff order as required by law. This is the only way we can create confidence amongst investors, so that as the sector begins to evolve, I'm sure you're seeing all the things that are going on in the sector. And there's a move for new legislation. There'll be more players. The market will be more dynamic. You need to create that enabling investment environment so that new players can come into the game.
All right, Mr. Itobia, just before we let you go, there's always the argument of we have this amount of power generated, which is much, much more than this amount of power distributed. And so is it either some is left fallow or is lost in between? Help us to understand what's going on around this generation and then the distribution.
Thank you. I'm glad you asked that question, because consumers need to understand how the power industry works. Most of the power we get in Nigeria are from thermal plants, and the feedstock is gas. I think 80% of that. The remaining is hydro. We don't have too much problem with the hydro element. It's the gas element. And as you know now, gas to power has not been the best of policies generated. We use gas for export to LNG and co, but when it comes from gas to power, we're lagging behind. And so most of the contracts at that end are what we call best endeavor contracts. They're not contracts you can actually hold the gas codes to. The gas codes themselves claim they're owed a lot by the government. So they give power when it's available. And most times you have grid collapses. It is because the gas codes pull the plug. And when there's no gas, you can't generate power. And when you don't generate power, there's not much to distribute, to transmit in the first place. And the transmission company itself can collapse if it doesn't have power. If it has too much power because of its own constraints, it can also collapse. For example, under the MITO we're discussing, the promise we've been given as disclosed is that initially from 5,000 megawatts, the government is now saying we'll give you about 4,500 as a minimum. But only the last few days, if you notice, there was a minor constraint for production. It fell to just under 2,000 megawatts. So these are the kind of uncertainties we live in. And the discos, who are the last mile, unfortunately facing the industry, are the ones who carry all the blame, not minding that the discos can only distribute what is given to them. If you notice during the holiday period, when many industries were shut down.
Oh, wow. Seems like we have a little bit of a freeze there. Okay. Are you back, Mr. Toby?
Just hold on.
Okay. Are you back? We can see you and hear you, Mr. Tomi. You're back. You're about to conclude your thoughts.
Can you hear me?
Yes, yes. All right, I guess we have to leave it there for Mr. George Etomi. He's the chairman of West Power and Gas, and that's on the board of EcoDisco, telling us that, yes, indeed, you have seen less units compared to what you had last year or in December. But he has promised that there'll be more communication between the discos and the consumers, and that will at least keep the consumers abreast of what to expect when you go out there to recharge your power, your electricity in Nigeria as a whole. And one other constraint that seems to have been a hurdle, a long-lasting hurdle in the supply of electricity has been the issue of metering, because closely related to pricing is metering. We've heard of crazy bills, we've heard of, all kinds of terms being used there. And we do know that there's the meter assets program that the federal government started a couple of years ago. Is supposed to ensure that all Nigerians have meters to help in pricing. Well, we've been talking about this. Well, let's hear from the Vice President of Meter Manufacturers and Assemblers Association of Nigeria, Engineer Demola Agoro, joining us from Oyo State, Ibadan in Oyo State. Engineer, good morning and Happy New Year. Thank you for your time this morning.
Morning, Happy New Year.
Yeah, so we were just talking about pricing now, and we know that pricing is closely related to metering, because if not, people are reluctant to pay their bills because they say they are being charged too high, and then of course the discos also say it's too low and all that. Where are we in the area of metering Nigerians?
Well, we've been actually make substantive progress in the area of metering, though people are complaining that there has not been much progress. You can see in the last year, the NMMP was able to deliver about 1 million metering into the sector. The meter access program put in place by NEC has even increased that. Over the course of last year, a lot of discos and a lot of customers that are key into the meter asset program has been able to put meter into their houses through this program. The only challenges we're having, just like, is for people to understand the program and to know exactly how the program works. If we can have enough people to key into this program that is being put in place by NEC, I think we can easily solve the problem of metering instead of people waiting for free meters.
Engineer Agoro, please tell us, how does it work for the viewers who are watching, who would like to key into it and get their meters? What should they do? What is the procedure?
The way it works is that NEC has registered a lot of companies within the sector. or as a meter access provider. This meter access provider work with different discos within the NESE. If a customer there are meters. I can assure you there are meters available. The issue now is that for the customer to go to their specific disco and key it, when you look at various discos website, these things are communicated on their website. But customers seems to believe that, oh, there's no meter, and people want to go through the back door to get meter. When you visit the site of, I know for Ibadan Disco, Eko Disco, Abuja Disco, Enugu Disco, most of the discos have this program well projected on their website. It's just for the customer to follow the right thing, go to their website, have an account, get registered. And under NEC rules, once you make payment for a meter under the MAP program, you are obliged to be installed within 10 days. If this meter is not installed, it's for the customers to report to the regulator.
So how long should it take, ideally, from the first interaction where the customer goes to this website to the delivery, including the 10 days you have mentioned?
What normally causes delays sometimes is that, you know, most of these customers they don't have a bill. Some of them that even have an estimated, they just get connected, they don't have an account with the disco. Some people are just using, as long as you have an account with your specific disco, from the day you register, and there is going to be what they call a physical survey. Disco will send with their map, they will go to your house, they'll do a physical survey of your house, determine the type of meter that you are required in that house. Once that physical survey is completed, then they will issue you a demand for the payment. As long as you make the payment, it's 10 days from the day where that payment is made that your meter must be fully supplied and installed.
So how do you react to some people who say, for instance, they've had individuals come to say they're coming to do the survey of the house, and then there's been a code following that line of communication. Then there's also the other conversation of a dearth of skills, human resources that are supposed to follow up and implement or, you know, fixing the meters.
The issue here is that most of the meter access providers have a well-trained installers that are supposed to do this installation. You know, the survey is going to be conducted with the customer and the disco's representative with the map. As long as the customer makes themselves available, most of the problem we have is that people just want meter, but they don't make themselves available for the survey. People are saying they are busy, and there's no way somebody can go into your house in your back. So once you are ready for meter, people should make themselves available to conduct the survey. As long as the survey is conducted and the disco gave you a permit to make payment. That's why disco does not necessarily, they don't usually give people permit to pay until when they are sure that their house has been physically surveyed. As long as your house is surveyed and you are given permit to make payment, then your meter, even most disco, they force us meter provider and map to make sure we have enough stock in their warehouse before they issue permit for customer to make payment. Once they make this permit to make payment, I can assure you within 10 days, your meter will be installed.
All right, Engineer Agro, so you assure us Nigerians that we have enough meters. It's just for us to make ourselves available for the process. Then we'll get our prepaid meters.
That's true.
All right, thank you so much, Vice President, Meter Manufacturers and Assemblers Association of Nigeria. Thank you for your time this morning.
Thank you very much.
All right, electricity, power, we all need it. We need it to get the economy running, and we also need money in our markets, our financial markets. That's why Will Ibong is here now to give us updates. Hi, Will.
Yes. We do need the electricity to get the factories and the businesses running, to get the money in.
Exactly, and get the investors interested in the stocks.
We'll see a boost in the market because, you know, cost of doing business will probably go lower because electricity supplied from the grid is usually lower than trying to generate it using petrol and the rest of them. So it's quite interesting to see. He's saying that Meters are available, but we just need to be available.
I can bet if you go out there and talk to the consumers, they will tell you we are available, but we don't see
the meters. So it's a different story aside, listening to this side and listening to that side. We just hope there's a balance that will be created. We'll look at the bond markets and see how it closed yesterday. We still see bullish sentiments still persisting there. Average yield for the bond market closed contracted yesterday by 2 basis points to 12.5%. Now, across the benchmark curve, we saw the average yield contracting at the short end of the curve. And this was followed by the buying interest in the January 2026 paper and also the April 2032 paper. And we saw it flat also at the mid and the long segments. Now, Treasury bills market also traded with bullish sentiments. So average yield contracting by 44 basis points. That's falling. Yields still dropping in those spaces to 3.6%. Now, across the curve, we saw the average yield close flat at the short and mid segments, but dipped at the long end as market participants demanded the long paper. That's the Treasury bills market. Now, elsewhere, the average yield was flat at 3.4% in the almost segment. We're going to talk to Ramat Baba. She's the chief dealer at Treasury FBN Quest Merchant Bank to give us more insights as to what's happening in the market, what's causing the drop in the yields. Maybe there's something going on. She's going to be able to give us clarity on that. Good morning, Ramat. Good to have you on the program.
Good morning. And a Happy New Year.
Happy New Year. Happy New Year. It's good to have you after such a long time. Now, we've seen system liquidity. It appears, from what I'm seeing, to be over $1 trillion. Can you tell us what's going on there?
Okay, so the system is currently liquid to the tune of 1.4 trillion, and that's actually following Shopee credit that hit the system last week. That's one. And also, apart from that, we also noticed that the CBN, there were no CRR debits, that's the cash reserve requirement. CBN did not pass any debits to banks last week, Friday, probably because it was year end and all of that, and activities have kind of slowed down, so there were no debits. And following that, we've seen a lot of liquidity in the market. Of course, a lot of people are wary of the fact that coming into this week, there's an FX retail auction and CBN might be debiting too. A lot of people have tried to look for outlets for their liquidity. So we've seen a lot of demand coming into the bond and the treasury bill space. As a matter of fact, all instruments have been trading very actively with yields dropping significantly across the curve.
Oh, I wonder how investments are turn in terms of return on investment. Now, we're looking at the government's debt management plan following the breakdown of the budget. We've seen that, and they said that the exposure of public debt to exchange rate risk is moderate, as the share of the domestic debt is about 61.08%. Now, what about inflation and naira devaluation risk to lenders in terms of return on investment?
Okay, so to be honest, this might just be a temporary thing because there's a huge budget deficit. When you compare the revenue to the expenditure and all of that, there's a huge gap in the budget, which has to be fixed. And the government might be unable to go into the Eurobond space, that's the international market this year, because yields remain very high in that space, given what's currently happening in the US, the higher inflation rates and hike of rates by the Fed. So, of course, the alternative might just be to continue to borrow all the funds from the local debt market. And, of course, if that happens, we expect to see rates going up. Probably from towards the end of January this year. The reason why we're just having this dip, I think it's temporary, but the reason why we're still having this dip is because the calendar for the auctions are not yet out. So everybody's looking to see what's going to be the offer, how much are they going to be mopping up from the system and all of that. But we definitely know it's going to be a whole lot of sales this year in that debt space.
And so you just talked about it. I was going to ask if there was a clear borrowing plan as to how the government intends to raise the 7.04 trillion naira from the domestic sources it mentioned, but you've just said that the calendar is not out, and we hope to see that calendar so we know how the government plans to raise this fund. But what is your outlook for the markets this week? This is Friday. How do you expect the market to close? How do you expect the investor sentiment to play out next week?
Okay, so for this week, today actually, because the weekend today, we actually think market activities will reduce because everybody all the banks are just trying to see what the CBN will be doing today. Will there be more CRR debits? Will they slow down on the debits this year? And that will set the tone for next week. If there is a debit, that means clearly liquidity will drop, and of course, people will start managing liquidity again going into next week. But if there are no debits or if there are no major debits, we continue to see the buying coming in, the buying pressures in the market next week again, as of course everybody prepares for yet another debit next week Friday. So going into next week, we actually expect that rates might go up slightly or remain at current levels, all depending on what happens today in the market. We are fingers crossed, really. We're waiting to see what the end does.
Really, fingers crossed. We just hope the market rebound. The yields dropping is not very encouraging. I don't want to put my money there. Now, thank you so much, Ramat Baba, Chief Dealer, Fixed Income, FBN Quest Merchant Bank, for sharing your insights on the program.
You're welcome.
So, I just want to round up with what happened at the start of the year, the start of the markets. We saw some reshuffling in the NGX, especially for companies on the NGX 30.
Yeah, we saw some people getting into the big 30 and some people
leaving.
Exiting.
We saw Union Bank, O&O leaving, and we saw Wema Bank and Boa Foods making that list. So we're just
congratulations to them.
Yes, congratulations. And then some people are exiting as well. We're just wondering what is going on with the companies and why are they losing their value in the market.
That's a conversation for you on Capital Market tomorrow, Will.
Definitely. That's
so
why
7 p.m. Please keep a date with Will Ibong. Should be on Capital Market tomorrow to tell you those companies that have exited and those who are now part of the Big 30 or the NGX, and even Meristem, Afex, and all of that. We will give you the details 7 p.m. Capital Market tomorrow. Thank you so much.
You're welcome.
All right, so now we shift and travel all the way, I think 6 hours flights to London, where Juliana is standing by to give us what's going on in the UK. Hi, Juliana. Good morning. Well, we've been talking strikes, and now the employers are fighting back, I think.
Good morning, Innie. Yes, I'm only 6.5 hours away from you. Can't wait to see you in person. But yes, some pretty alarming news coming from number 10 Downing Street at a time where they're still in recess. We're not expecting lawmakers to resume in the House of Commons until Monday, but we're having a slew of updates from Rishi Sunak, the Prime Minister's spokesperson, because this week has been the worst week in, 3 decades for industrial action. This week we've seen 2 series of back-to-back 48-hour walkouts from the RMT union, train drivers, and they were joined yesterday by the ASLEF union. Now, just before the Christmas break, it was pretty clear that the government were trying to pit the general public against union bosses to somehow stop negotiation around the table. And it was being said that perhaps new legislation would be put in place to basically make industrial action at a wide scale illegal. So bosses would be able to sack staff or take unions to court if the industrial action was so bad that they were unable to work. So we're kind of seeing that now with rails. So if you are watching from the UK, you could potentially get to your office, though instead of taking you 20 minutes, it could take you 4 hours. And that's what Rishi Sunak wants to prevent. He wants to prevent the gridlock that Britain is in. And we're expecting an announcement possibly today. Of course, as you can expect, the reaction hasn't been great. Mike Lynch, who is the General Secretary of the RMT union, the biggest, most vocal union in the UK, he said it's just basically going to make matters worse. But yes, like I said, we haven't exactly had the full brief, and we're expecting a statement imminently from the Prime Minister. But fingers crossed, there could potentially be in this new announcement some sort of pay offer for NHS staff. So a lot's going on. We're only 6 days into the new year. And already there are tensions. But if this new legislation can somehow chart a way forward for industrial action workers, then that's a good thing.
Yeah, Juliana, I'm sure by 1:30 during Business Incorporated, we will have some updates and more reactions from there. So I believe Ladi will stay on that. But there's also the report that last year there was some kind of energy diversification high when it comes to wind power in the UK.
Yeah, pretty interesting set of data we've received this morning from the National Grid, basically looking at, wind power in the UK. It can be very windy here. Yes, you've got to make sure you glue on your wig sometimes. And that wig has helped with energy diversification because last year, for the first time on record, wind power contributed to more than a quarter of electricity that was generated in the UK, which is absolutely phenomenal. I think one of the main reasons why this is happening is, yes, of course, it's very windy, but second, we know that the Conservative government have really made it a vocal feature of their mandate, if you like, to cut emissions. And then, of course, we had the onset of the war in late February. So most countries, particularly those in Europe, are looking at ways to diversify. I think there's been lots of media attention on gas, but electricity too, particularly as in Britain, a lot of that electricity comes from France. So the fact that for the first time on record, a quarter of our electricity supplies have come from wind is phenomenal. And I think now what the British government are doing, particularly the business ministry, are looking at ways that they can build credible infrastructure, particularly batteries, to ensure that they're able to store this wind so that they can use it to generate electricity in later months.
Yeah, Juliana, it sounds like something would like our government to also, because we do have a lot of sun and wind, and especially the northern part of Nigeria, if it becomes a government project, it could help us. We were discussing electricity some minutes ago. Well, thank you so much, Juliana. We'll talk to you at 1:30. Ladi Williams will be on with you.
Thanks.
All right, and talking about Ladi Williams, he walks in here, but this time he brings us news from the crypto space.
Yeah.
Are they using wind? Are they using turbines? Are they using dam? Are they using solar?
Well, we've had, discussions about,
the mining. Yes,
and,
I know that also was a controversy.
Yeah, so, but at the end of the day, you got to mine Bitcoin somehow, so.
And at the end of the day, we still have fear.
Yeah, we still have fear in this market. It's still a very fearful market, regardless of how Bitcoin is mined. It's still below, the 60K highs. Now let's look at the market cap this morning. We see it's still right in above that $800 billion level, still holding that level strong. Talking about the market cap of Bitcoin, it's down about 0.64% this morning. Seeing some kind of upward bullish move from Bitcoin, trying to stay above that 17,000 level. Let's look at the price of Bitcoin this morning. All right, market cap there. Down 0.64%, volume traded up 3.60%. Let's look at the price of Bitcoin now. See, it's trading at $16,792. This starts an upward correction above the 16,500 level, and analysts are expecting that at some point, if it's able to stay above the 17K level, might see some more upward movement for the price of Bitcoin this morning. The volume trading Bitcoin, $14.02 billion. And we see Ethereum there trading at $1,247. That's down about 0.32%. Marginal decline this morning, some profit taking, but we see Ethereum still holding strong to that $1,200 level. Volume traded quite thin, $3.84 billion. Let's look at the top alts by market cap. There we see it's just Cardano in the green, up 2.10%. We see Matic down 3.28%, and XRP also have some selling pressure this morning. BNB, though, having a nice move, trying to get back to that $300 level, still $45 shy. Let's look at the top 7-day gainers for the market. Throughout this week, we see the best movers this week. We see Solana topping that counter, talking about the 7-day gainers for this week there. We see Solana topping that counter, $13.10, up about 39.91%. Let's talk to Gilbert Okpata now, financial market analyst. Hello, Gilbert. Good morning.
Yeah, good morning, Mr. Ladi.
Good morning, Gilbert. So it's all about the Fed minutes from the last meeting, the December meeting, and every investor is looking at that. From the investors in equities, risk assets in the U.S., even crypto investors, all looking at the minutes. But some say it's bullish for crypto, some say it's bearish because it looks like the Fed are still going to raise rates. But it's now about how high are they going to go with the next rate hike? How are you seeing it?
Right. These days, macroeconomics like this is the main driver for the cryptocurrency market. And so activities like this is what investors just need to pay attention to. The previous numbers for like today's non-farm payroll was 263,000, while our expected numbers for today's 200,000. Why we may pay attention to today's number? When is this Fed meeting? Actually, the minutes which was published actually showed that the Feds are still committed on their plan to increase interest rates in 2023, even though they are inclining towards more of a flexible rate. And they also agree that they should increase this rate in a slow way, that gradually, in a way that will not trigger some economic risks to the economy. But while Bitcoin sits more on a very good support presently, we still see the dollar. The dollar is positioned on a breakout. At this point, more of a breakout continuation will be bad for Bitcoin and the cryptocurrency market. But looking at the flexibility at which the Fed still want to increase rates this time around, but slow, which means we are not going to see the kind of aggressive rate hike we have always had in previous months. I think, after each bubble will always lead to a deflation. We have had the stock market in its bubble, the cryptocurrency market in the bubble. Right now, we have the debt market, which is the government bond, presently in its own bubble. While the cryptocurrency market or risk-on asset seems like they are dissipating into a bottom. Likewise, I also think that the bond market or the debt market is heading up onto its own high. So I think this is actually a year where we are going to see the bond market reach its high, and risk-on asset, crypto included, look for a solid bottom, while we still pay attention to the macroeconomics.
Yeah, and obviously every investor out there is still looking for the bottom in risk assets, but obviously it all depends on what the Fed and other central bankers do in 2023. All right, thank you so much, Gilbert Japata, financial market analyst.
All right, thanks for having me.
All right, so there you have it. It's all about the Fed, central bankers right now, all eyes on what they do in 2023 to bring down inflation.
Yeah, well, I wish you would say it's all about the Central Bank of Nigeria.
Well, including the Central Bank of Nigeria.
One day we will determine the market in the world.
Someday, yeah.
Thank you so much, Ladi. See you at 1:30. Right. So that's it on the program. Well, the first working week in 2023. I believe we had great conversations, but a better one awaits you next week from Monday to Friday. Do remember that 1:30, Ladi Williams will be here to give you updates from the world of business. I'll be on Business Incorporated. I'll see you at 10 p.m. For the stock market report, and then we'll start all over again on Monday. But 7 p.m., do have great conversations waiting for you tomorrow. Saturday, 7 p.m., Willie Bong will be here with Capital Market. So do try to get some rest in the morning so you'll be ready at 7 p.m. I'm Mini John Mekwa. Have a great weekend.